How's everyone doing? I'm going to be talking about migration numbers this evening because we have been seeing some of the latest news coming in from the Central Statistics Office, and they're talking about the migration numbers. And this is now the third year in a row that there have been more than 100,000 people coming into the country from abroad. And so the numbers are pretty staggering. And I was looking at the Central Statistics Office stuff, and when you break it down, like it's quite interesting how many people are coming in. And this feeds into my belief that the way it is with prices and stuff like that, like they're not going to be dropping. And I know people have a view that we are now at a rate that is greater. The prices are now higher than they were in the last peak. And so people are kind of speculating that there's going to be a crash fairly soon and stuff like that. But I don't believe that. And the reason I don't believe it is that the statistics are just all pointing in the opposite direction. And I know, of course, it's possible, but that we've got it wrong. But my belief is that prices will continue to go up because people will continue to migrate into this country. And I was speaking to one of my clients earlier, and the red folders, yeah. I was speaking to one of my clients today, and he is a guy that is from Europe, and he's now working in Ireland. And he was explaining some of the reasons why he came to Ireland, and it's really quite dramatic, the difference. Now, of course, there's a lot of beliefs about the numbers of refugees that are coming to Ireland and all of that stuff, and that's a totally different story. Of course, there's a lot of refugees and asylum seekers, but I'm actually just talking about the people that come to this country for work and that have permits and stuff like that to do that kind of thing. And he was explaining that if you go and look at, say, Southern Europe, you've got Portugal, Spain, Italy, Greece, those kind of countries that are on the south Mediterranean, with the Mediterranean. Those countries, the salary levels that you can probably expect to earn for exactly the same job as you can get here in Dublin is about 50%. And because of that, people spoken like a true global communist. There you go. There's some interesting views in here. I'm just simply telling you what I'm seeing in the numbers, and people seem to take it very personal. But the reality is this guy, I won't name him, but we had a good conversation just about an hour ago about all this, and he was explaining that he lives in Ireland now for the last couple of years, and he moved from Greece. And before he moved here, he had been located in Portugal. And during this period of time, he's held the exact same job, same title, same responsibility, same company, and exactly the same role. So it's an identical position. And in Portugal versus in Dublin, 50% difference. Portugal, he was getting 50% of what he now earns in Dublin. And because of that, he says there is just no way anybody from Spain, Portugal, Italy, Greece, any of those guys are going to stay there for a job that they can get paid double if they come to Dublin. Now, what's keeping them back? Obviously, housing is a big issue. But he was explaining that if you were to come to Dublin, like, you will pay more for rent, for sure. Housing, rent, all that, much, much more expensive in Ireland. But he said that in terms of the difference in pay, what you're getting paid double what you would in Portugal or Spain or something like that. That doubling of your salary, you're increasing costs in terms of housing and maybe, groceries and things like that. You're talking about maybe only 30%, 35% higher than you would be back home. So then maths is much, much better. It's in your favor. You're still coming out on top, moving to Ireland and having to deal with the housing crisis and stuff like that. Now, obviously, it's a big issue. But that was one of the insights. Now, the other thing If you're talking about Irish people that are living in Ireland that are sick of it, the housing issue and all that, and they're thinking of moving abroad, what they don't do is they don't move to Spain, Portugal, Italy, or Greece for a number of reasons. First of all, people would prefer not to move and end up on half the salary, number one. But number two, there's obviously the language barrier there. And so anybody who is leaving Ireland is most likely going to move to Australia, where the weather is good, or they're going to move to the US, or they're going to move to Canada. And that is because A, the salaries are going to be higher, but B, they speak English. And so you don't have to have a second language and things like that. So this was really interesting. Now, the only alternative to that would be, say, for example, moving to Asia or Middle East. Now, I see Finton, welcome. Anyone who's in Dubai, like obviously Dubai is an interesting place, Abu Dhabi. One of my clients is based in Abu Dhabi. And that is a place where you can get a good salary. But when I was talking to the guy based in Abu Dhabi earlier, he was saying that the vast majority of people that he knows that would be, say, Irish based living or Irish living in Abu Dhabi, so that the vast majority of them are teachers, working in the education system in Abu Dhabi. And so that's another aspect there to kind of consider. They'll do a couple of years and then they'll come back with a saved up a deposit, maybe to buy a house or something like that. And you can do that tax free. If you're living in Ireland and you're on a teacher's salary, the likelihood is you're going to be paying most of your salary out in rent, and therefore you're never going to be able to save up the money to pay a deposit or to save up a deposit. And so you go somewhere like Dubai, Abu Dhabi, whatever it is, you'll earn a lot more and you'll earn it pretty much tax-free, and therefore you can accumulate some money. And so you can come back with your deposit and then maybe buy a place or whatever it is. So that is one of the reasons why there is migration out of the country, but the vast majority of people are coming into the country. So last year, I'll read some of these numbers now. These are going to these just blew my mind. I don't know what you think, but first of all, we're at an immigration level now is the highest today that it has been in 17 years, since April, I think it was, of 2007. And so just before the crash, we are now at that number of people coming into the country. So for the last 3 years in a row, 100,000 plus people have come into the country. And it's an insane level. Now, there's also the highest number of people have left the country as well since 2015. And in 2015, I'll go into those figures about emigrating abroad, but the migration into the country. In the 12 months to April of this year, 149,000 people immigrated into the Republic of Ireland, which is the highest figure in 17 years. It was the third successive 12-month period where more than 100,000 people emigrated into the state. Now, there was also a number of people that emigrated out of the state, immigrated in, emigrated out. And but the numbers don't tally. Like if you look at, there's something like 150,000 coming in and about 50,000 leaving. And so the numbers, whilst 50,000 is a lot, it's nowhere near the amount of people that are coming in. So it does make it interesting. I'm going to answer all the questions that I see, by the way. I see a number of questions about real estate investment stuff. I'll get into all of that shortly, but I just want to finish this point on the migration and stuff, because I think this is one of the reasons why the house prices are going to continue to be as high as they are. Now, if you're looking at this here, among those who emigrated into the state, 30,000 were returning Irish citizens. So 30,000 people that were living abroad are now living in this country. And so if you take it that we'll say 30,000 people, the likelihood is that maybe 15,000 of them are couples. And so 30,000 people maybe coming back as a couple, or maybe not. But if we were to assume that that's two people coming in, returning as a couple, then you're looking at 15,000 households that are required to be taken out of circulation, which is interesting. Like that's another 30,000. We already have an acute housing crisis. How are we going to find space for another 30,000 Irish people returning home? 27,000 people came into the country in the last 12 months that were EU citizens from another part of Europe. Now, as I said just a few minutes ago, the likelihood they're coming from Spain, Portugal, Italy, because those countries are, the salaries are much lower. And so you come to Ireland and you effectively double your salary. Interestingly, 5,400 came here from the UK. And then there was 86,000 immigrants were from other countries that include Ukraine. So obviously we do have a lot of Ukrainian refugees that have been coming into the country. And so that is a large number. But if you take the overall figure of 150,000, or what is it, 149,200, 86,000 of that was, the made up of those other immigrants. And so that means that there's at least 60,000 people there that are, 65,000 more or less, people that are here for work, that actually are coming in, that have jobs, or that have, kind of basically have an income. And so they're not, coming in to live off the state or any of that kind of stuff that people object to. The number of immigrants 12 months to 2024, April of this year, is the highest since the same period in 2007. And consequently, the state's population is now estimated to be 5.38 million, an increase of 98,700 on the figure that was recorded in 2023. And so if you think in 2023, like, the housing crisis hasn't started in the last 12 months. We were talking about this 12 months ago. Everyone has been talking about just how crazy it is 12 months ago. And here we are, another 98,000 people living in the state that weren't here 1 year ago. Where are they living? Like, where are they all going? Because there is already, like, just such a shortage out there at the moment. A figure that I saw earlier, which blew my mind, is that there are currently 1,885 properties to rent in the country, the entire country of Ireland. That's how many properties are available to rent at the moment, 1,885. And so where do I get these immigration stats? The Central Statistics Office actually announced them today. This was in the newspaper today, that this was a press release by the Central Statistics Office today. So all of this is fresh out on the newspapers. I'm reading from the Irish Times, from today's front page of the Irish Times. Anyway, going into the numbers, let's see, the largest increase in history was in 2008, so just before the crash, when the population that year rose by 109,000. And so we are up at 98,000 now. So we're still 10,000 off the boom, but it's a lot. It says now that at the same time, in the last 12 months, 69,000 people emigrated from the state. So 69,000 people have left the country. And that compares with 64,000 last year. So there's still a lot of people leaving the country, but there's vastly more people coming in than there is leaving the country. And this is what is the reason that I believe that house prices are going to continue to be under pressure, because there's not enough houses being built. If 98,000 more people live in the country now than did 1 year ago, and we've only built 34,000 housing units in the past 12 months, then that means that there's 60,000 housing units short of where we were 12 months ago. And those figures were already badly impacted by the stuff before that, So this is one of the issues. Something going on about Oasis. Yeah. I don't know what you guys are all saying, but no, I'm not related to the lads in Oasis. I think they might be distant relatives. You go back maybe a couple of generations. Anyway, it's saying now, out in terms of the numbers of people that have been leaving the country, it said that there is a strong outward flow of Irish people migrating to Australia. And it said that an estimated 10,600 people moved to Australia from the Republic in the last 12 months. And that is an increase of 126% on the previous year. So it's quite high. But then if we go and have a look at some of the other, they were saying that 6,400 people moved to the Republic from Australia. So, you know, there's more people coming into Australia than there is leaving in this direction. Alongside Australia, 15,000 people left the Republic to live in the UK. 15,000, up from 14,000 in 2023. And 20,000 people moved to the Republic from the UK. So there's a net inward migration in that case. Overall, the numbers of immigrants in the 12 months to April 2024 is the highest since 2015. Of the 69,900 people that emigrated, 34,700 were Irish citizens, 10,000 were EU citizens, 3,000 were UK citizens, and 21,000 were citizens from other countries, including Ukraine. And then it goes into the age groups. So what's interesting about the age groups is that if you're thinking about the different types of house purchasers or renters, you have to look at the age groups that are moving abroad. And so there was 33,500 of all the immigrants that left were aged between 25 and 44. So that's a significant number. And then there was 24,000 aged between 15 and 24. So that's a good chunk of the young people. And so that would suggest to me that there's a lot of students and people that have kind of, you know, taken a break from college or whatever, or just finished college and decided to leave abroad. So anyway, that I thought I'd go into that. Now, there's also a headline today that just blows my mind, and it's basically breaking down the Savills report today, and it says that the chronic shortage of properties to rent across the state is at, you know, the worst levels that they've ever seen. There are just 5.9 properties to rent per 10,000 people in Ireland. And so think about that now for a moment. For every 10,000 people, there's 5.9 properties to rent. And so let's say 6 properties. So 10,000 people have to squabble over 6 properties to rent. This is from research by estate agent Savills, and it was mined from data from the property website Daft, examining rental availability across each of the 26 counties. It found that as of August the 19th, so that's just in the last week or so, there were an average of 5.9 properties for rent or for sharing for every 10,000 people in the state. Now, it said if you were to remove the sharing and just make it rental only, that ratio falls to 3.5 properties per 10,000 in the state. And it compares with pre-pandemic levels of 9.1. So we are now at about 30% of where we were before the pandemic. The research indicated that Monaghan is the worst county in the state, where there is only 2.4 rental properties per 10,000 people. And anyway, I won't go on. What I'll do is I'll start answering some of the questions, because there's a lot of questions I can see in the chat there. The final thing I'll say is that the Taoiseach reaffirmed pledge to build 250,000 new homes in the next 5 years. So I guess that's good news, but how many people believe that's achievable? We'll have to wait and see. If we're at 34,000 now at the moment, there's a big increase. And 6 per 10,000, Finton, absolutely crazy stuff. And we did some numbers there earlier, and somebody was reporting that there's 1,800 properties available in the state at the moment, just 1,800. And they were just breaking down the numbers, and it's just mind blowing when you think, if you think that 98,000 people immigrants came into the country in the last 12 months, and of those 98,000, there are only 6 properties for every 10,000 of them. So do the maths. That's like 50 properties available for the 98,000 people that have moved into the country. So crazy times we are living in, for sure. What I'm going to do now is start jumping into the questions. So let me start with questions in the Instagram group. And so, because I see so many on TikTok that I'll be here all night. So let me just scroll down to the first question. And the first question is, let's have a look. Somebody wanted to join the call. I don't really have the facility to do that. What do you think of HMO? Regulations coming soon? ? Layout will be the same as HMO, like pre-63 after regulation. So it's funny you say that, because I was thinking about this the other day. Last week when I was doing this talk, somebody was asking me the question, like, what is the difference between, like, we say, a bedsit and a HMO and a pre-63? And there's a subtle difference. Like, to people who are not familiar, it all sounds kind of like the same, but actually there's a difference. And if you look at we'll say, for example, a bedsit. Bedsits were done away with by the planning system a couple of years ago. And what a bedsit was is, if you take, for example, that the houses that people would have, they would have a small room with, we'll say, a small kitchen counter, and you'd have a sitting, like maybe a sofa and a bed. And so you basically lived in this one space. Sometimes you shared a toilet, but a lot of the time you had just a small kitchen, maybe with a microwave or a cooker or something like that. You'd have a sink, you might have a washing machine, and then you would have your bed and your sofa and your TV all in that one room. And that was a traditional bedsit. And they were done away with, as they were considered to be kind of like below, living standards and things like that. So that's the first thing. That's what your bedsit is. And so some people would equate a HMO to being very similar to a bedsit. But the reality is that a HMO is usually just, it depends on the quality as well. One of my clients is very, very good at the HMO stuff, and he will do pretty much all of the new stuff he's building is ensuite. Every single room has its own ensuite. And so it's not a situation where you're, sharing bathrooms and all that. But the difference between a HMO and a bedsit is that in the bedsit, you had your kitchen in your bedroom effectively. Whereas the way the HMOs are done is usually there is a shared kitchen, and it's usually, like, the way that I've seen them done, they're decent enough kitchens. Like, people will put in 2 ovens, 2 hobs, they'll put in 2 fridge freezers, 2 washing machines, so that there's enough to go around, rather than everyone waiting for somebody else to finish, which can be frustrating, and it can also mean there's a lot of wear and tear. And so that is something to consider. The other thing then, if you think about what is a pre-63, so pre-63, these are, you'll see them a lot of the time in Rathmines and things like that. These are big old buildings that they used to be large houses that would have been a single residence, for the gentry back in the, the 1850s or whatever. And you would have had these Georgian houses on the Marion Square, various places like that, and big houses where you would have staff living down in the basement, and then the gent that owned the house would live up, and there'd be tons of staff going up and down, and there was fireplaces in them all. Those were built for the landed gentry, and that would be their townhouse, and then they would have the big mansion kind of in the countryside. And some of these places would have 20 and 30 staff, like, working in them, because it was back in the time when staff worked for next to nothing. Like, there was actually absolute peanuts. And then the Planning Act came into being in 1963. And so after 1963, you had to apply for planning permission to do this. And so anybody that had a property that was already split up into multiple units, before that Planning Act came in, that's why they called them pre-63, because they were subdivided into, instead of having your one house, your big, townhouse that had so many rooms, they would split them up, and they'd say, right, it's going to be a house of maybe 16 apartments or 16 bedrooms that they're all sharing, like, maybe 1 or 2 bathrooms, and that's your pre-63. So the plan, you couldn't get planning permission for it today. A lot of the time, if you buy a pre-63, you have to actually look for the evidence that it has been in use as a pre-63 unit since 1963, because a lot of people might have decided in the 1980s to convert the property into something like that, and it's not necessarily the case. If you can't show, we'll say, electricity bills going back to 1963, then you might actually have a bit of a problem on that. I see a question here from Jonathan. Gavin, I'm tearing through your podcast, getting great value out of it. Just wondering, is it too late to jump on your mastermind? Oh, Jonathan, I will write to you separately afterwards. Going back to the questions here anyway. So look, HMO, what do I think of it? I'll tell you that it's more work, but it can be an effective way to get yourself onto the property ladder. Because if you buy a traditional house and, let's say you buy a house and it's 3-bed or 4-bed or whatever, and you rent it to a family and you're getting 2,500 a month, whatever it might be, maybe it's more, but if you're getting that amount, the likelihood is that what you've paid for the property to get it, when you take your deposit out of it and you're paying interest on the loan, a lot of the time it's very marginal and you're really only just about covering like with like. Whereas if you go into a HMO, you can end up getting substantially more rent. Now it does take more work, because the work that's involved in, like, first of all, instead of having one tenant that you're renting it to, which might be a family, you might have 6 different individuals, and it's your responsibility to manage the house while the 6 people living in it pay for just the bedroom that they're in. And so you have to cover the electricity and the gas bills and things like that. That's a part of it that can be a little bit difficult, because when people are not paying for their own electricity bills, they tend to abuse the system. And so I've got clients that tell me that they've gone into a house and the landlord is paying for the electricity, and so naturally they walk in and the windows will all be open, but the heating system is on full blast and everyone's walking around in a t-shirt. And so, nobody's paying for the bill, so who cares? Like, just lash it on there. If it's too hot, open the window, don't turn off the central heating. And that is the way it has been done traditionally. Now, there are some of my clients that are approaching this in a different way. They are going out to corporate lets and they're saying, there would be contractors looking for space because they want to bring a load of laborers in from, say, Eastern Europe or something. They can't get accommodation for them. So if you're going to offer somebody a job, you got to offer them the job and the accommodation. And so there would be people that would be looking for that. And so contractors might be in the market to go and rent a whole house, and they'll take over the bills, they'll take over all that, and you just simply collect a check every month. That is really attractive. Like, that is, one of the clients I'm working with is getting, I think his monthly check that he gets is 6,500 a month. And he gets that for what was a 4-bedroom house, but he extended it and he turned it into an 8-bed. So an 8-bed getting 800 or 850 a month, something like that. It's pretty, do the maths, it's pretty good. And there's also the little nuances that you've got to know about in terms of, like, the way you lease it. Like, do you use a lease or a license and things like that? And there's a VAT threshold you have to be aware of. All of that is stuff that I talk about in my programs and things like that I do. So if you're interested in those programs that I do, reach out and connect with me, and I'll be happy to send you on some details. And then there's a mastermind that I have, an Irish property mastermind. It's a paid mastermind, but you get a weekly call with me and guys that are actively buying and selling in the market and doing this kind of thing. We all join the call and we just talk about this kind of thing. And so you can get good feedback from other people that are doing this kind of stuff. Abu Dhabi, UAE. And so Finton is saying that security and safety is now one of the main drivers to relocate here. Tax-free earnings and quality of life. Yeah, like, definitely one of the things that I've been listening to Mike Thurston on YouTube lately, and he was talking about he's in Marbella at the moment because Dubai gets too hot in the summer, and so they decant to Marbella, and they spent a couple of months in Marbella enjoying the cooler weather, we'll say, which sounds crazy. But he was saying that when you live in Dubai, you feel absolutely safe. Like, you can have a convertible car and you just leave the roof off and leave it open and nobody's going to touch it. Whereas if you go to, Spain and stuff like that, there's a chance that the car will get lifted and houses get broken into and things like that in Spain, because there are, there's some problems in Spain. I know I have a villa in Spain, and it's there are some issues. Like, there have been break-ins, there have been actual holdups where wealthy people that are living in a big villa are actually held at gunpoint, and the husband is bundled into a car and told to bring cash to these guys, while the family are under good points. So there's that. You don't get that obviously in Dubai. That's just not a problem in Dubai. Obviously, the issue in Dubai now is that there is some increase in cost. It has started to increase. And then as somebody I see, Mariangela is saying that there is no pension scheme in Dubai, and people will buy to have an income. So that's interesting insight there. Going down through the questions here. Where did I get the immigration stats from Harvey? That was the CSO. Damien's asking, how do you solve the housing problem when we don't have enough construction workers? Damien, that is the biggest issue that we face in this country at the moment, as far as I can see, because we want to have a property, we want to build more properties, but we don't have the capacity that we used to have in the construction sector. So in the construction sector, we had a situation where back in 2007, we built 85,000 units. This year, we're building 34,000 units, I think it is. I think they might get that up to 40,000 in the next 12 months or something like that. But we're at half, not even where we used to be 17 years ago. And it's not like you can just simply say, okay, guys, let's, turn it up there, because most of those trades, like, they emigrated to other countries or they retooled and they got different jobs. So as I know, and I said it last week, and I know a lot of people commented on this, that somebody that was working as an electrician on a building site back in 2007, when the crash came along, these guys lost their jobs. And when they lost their jobs, what do? They had a choice. You either emigrate abroad, or what you do is you go back to college and you do. And in the case of a number of these guys, they went and they did a degree in electrical engineering. And so they've moved from being an electrical tradesperson to electrical engineer, so professional, working at a computer, have all the knowledge from the sites, but now are behind a desk. And that is probably earning the same money, if not better, but you're also, you have a more comfortable life and you're not kind of showing up on building sites and stuff like that. I know a few people that would think that it can be hard in the winter working on sites and things like that. It gets pretty cold. And so it's a lot of people would prefer to be in an office during the winter months. So how do you solve it? Now, the other thing is you go out abroad and you're going to say, guys, come to Ireland. We'll give you loads of money for, being in our construction sector. And there is a bit of that going on, and like people will get compensated well. But the issue is going to be, where do they stay? And that's the issue that everyone's facing now at the moment. 98,000 people in the country this year compared to last year. And if you consider that those people, they all have to find accommodation. And so if you're going to try and bring in, we'll say 50,000 construction workers to boost our construction capacity, what's going to happen? You're going to have 50,000 people looking for accommodation, which will just drive up the issue. Now, one of the ways you might look at it is that you could go to, we'll say, labor camps, and actually the construction of labor camps, maybe prefabricated like villages that are just built in order to accommodate people on a temporary basis. That sounds like an interesting solution. You might have a whole load of people up in arms about it and say, this is not great. This accommodation is substandard, or all that kind of thing. And I know if you go to the likes of Dubai or any of those countries, like where they're building, where there's a construction sector, and I saw this in Qatar when I lived in Doha, like the guys were being brought in from India and Pakistan and stuff, and they were living in absolute squalor. Like there was 8 people sharing a dorm, and they were cooking food in that dorm and everything like that. Like it was really pretty poor conditions, but they were paid very well, not by our standards, but by their standards. They were being paid so well that they were able to live there, do that, and send money home for the family. And so that was the kind of the way that they were going about it. I think a version of that where you could attract people into the country, you could say to them, look, if you work here, a certain amount of your tax, a certain amount of your income will be completely tax-free. You live in this temporary accommodation unless you can find other accommodation that you're happy to live in. And just as long as you're involved in the construction sector, working on housing projects, this is a deal that's open to you. That might be a way to kind of like boost the construction. And because certainly at the moment we're at kind of max capacity. So, but it's not just late workers, like the architectural firms, the engineering firms, like everyone is under pressure. And so I don't see a situation where it's really easy to fix this, because like you go and you fix one shortage in one area, but that's going to put, the bottleneck is going to move to the other trades or the other areas where there's professionals that aren't able to kind of make this work, So anyway, I'll continue on with the question, but Damien, yeah, good question, definitely. Liam is saying, I have been thinking recently and have a question on stocks versus real estate, with rental yields on average 7% and stocks returning 10 plus. Can you explain why one should invest in property? Well, I think, Liam, it's a little bit of both. I don't think I would say go one or the other. I would say try to have a, one sec while I just turn on the light. I would go and I would try to get a mix. So I would have a combined investment portfolio that gives a little bit of diversification. If you're all in one or all in the other, and then there is always corrections that take place, then what's going to happen is you're going to go and see your stuff crash. And in 2008, that's exactly what happened to me. I had like 99% of my wealth was tied up in property. And that's why it had gone up so rapidly, because it was in that proportion. And then all of a sudden a big crash came, and like I really suffered really badly for several years because of that. One of the things that people don't like about the stock market is the volatility of it. Whilst you can say that it's up 10%, the problem is that those figures are kind of an average over 12 months. But you could go and buy a stock tomorrow and pay, 10,000 to put, to buy these stocks, and then it could be worth $7,000 a week later. And that is because of the volatility of the stock market. Now, the thing is if you hold on to it for the whole 12 months, you're likely to end up back up. But a lot of people just do not enjoy that volatility because they don't have the mindset for it. If you know that it's going to be a rough ride and it's going to be up and down and stuff like that, and you're mentally prepared for it, well, then you're fine. But if you've just saved up 10,000 and you've put it into the stock market, and you're looking at $7,000, you'd be beating yourself up, thinking to yourself, I could have kept that $3,000 out and I could have just bought the shares at $7,000. And you'd be, I've seen that, and I've experienced that emotion myself when I saw the ups and downs like that. Now, equally, if you bought at 7 and then it bounces back, you're up 30%. That's attractive. But if you get it wrong, it's very unattractive. Now, the thing about property, I think, and I've looked at this a few times, is that there will be people like working in the trades, we'll say electricians, plumbers, all that kind of stuff. Those guys tend to like to invest in property because it's something that they know themselves. If there's a problem, they can fix it. Whereas if you're buying stocks and shares, like nobody gives you an education on how to buy stocks and shares. And so if you're there and you've got like money that's you've saved up from working on a site or something like that, and you've got 50,000 and you're thinking, I'm going to go and put that into the stock market. I know nothing about the stock market. Like, how do I know that I don't end up losing it all? And so they decide, I know I'll buy a house that I know I can rent, and that I know I can, if there's a problem, I can fix it. And so that is a lot of the of the certainty that you get from something that you know, the property. Having said that, one of my clients has a pension fund that he's saying that it's returned 17% in the last 12 months. And we were joking about, like, why would you buy property when you're able to earn this kind of money? And, and that's exactly it. Like, having a combination, a portfolio that's spread across multiple assets. I would also say it might be worth your while putting some money into crypto as well. Now, on that topic, I want to make it clear that I don't promote any any Bitcoin or crypto scheme whatsoever. And I know there is an imposter pretending to be me in TikTok at the moment, going under the handle Gavin J Gallagher 02. That is not me. That is an imposter pretending to be me. And I know from multiple people that have written to me now that this person is offering propouting to be me, offering a crypto investment. And they've all sent me screenshots, and it's exactly the same guy. Like, oh, hello, are you interested in, the Bitcoin or whatever it is, some sort of crypto thing? And it's not me, guys. So do not fall for it. I hope you're skeptical enough about, quick rich quick schemes not to fall for that kind of stuff. But I'm worried about it because I know somebody contacted me on LinkedIn 3 years ago or something like that, and he had been taken in by a scheme like this, and the guys had gotten something like 50 grand out of him, and he was certain that he was dealing with me, and he was certain that he was investing in a property scheme that had guaranteed returns and all sorts. And he writes to me, Gavin, why aren't you responding to my emails? And he wrote to me in LinkedIn, and I was like, sorry, I have no idea what you're talking about. What emails? And he's like, I've been writing to you since I invested with you. And I was like, oh dear, you sound like you might have been scammed. Like, I hope you didn't put too much into it. And he goes, what do you mean? I've invested 50,000 with you, with me. And I was like, no, you haven't. Like, you've been scammed for 50,000. And he was onto the Gardaí and everything like that. And like, as it turns out, he was scammed. And that's the bottom line. Lisa, how are you? Enjoying my podcast. Students going to ATU Sligo now. Interesting. Yeah. Hi, Lisa. We must reach out, have a chat. Anyway, I'm going to carry on. So Liam, hopefully that answers the question. Like, property is one of the reasons also why property can be attractive, is that you can make your money go a little bit further. When you're talking about 7%, you're talking about 7% on the basis of the purchase price of the house. But if you're investing in property and you're only putting 30% in and you're borrowing 70%, the 7% is on the full value, but your 30% is what's getting the increases in property values and stuff. So the likelihood is you're getting your 7% on the total, plus you're also getting the capital appreciation that's happening. And so I know people that, you put 10,000, or we'll say you put 30,000 down on a property, and the property goes up by 50 grand. And so your 30 grand went in, it went up by 50 grand in the process. And so you've effectively nearly doubled your money, or tripled your money in this case. So that's one of the reasons why leverage can be a good thing. Harvey is asking, what's your view on development land values with ORZLT coming for land speculators, developers? This will bring more supply to the market for builders. Yeah, the question really, look, anything that brings more land into the system is good. But if you think about all the bottlenecks that exist, it isn't just simply, oh great, there's more land. Like, there's a timetable, first of all. Like, for when you start, we've bought land, and we could be looking at maybe 2 to 3 years until there's actually houses on that land. When you go for planning permission, even though planning permission should theoretically be handed back to you, you should have your grant back within 8 weeks. It's almost never 8 weeks. What happens is, usually the planners themselves will delay it for maybe, it'll take 12 or 16 weeks to get your decision. But when you get your decision, you also have then anybody who wants to object to it coming out of the woodwork. And people might have a legitimate reason to object, but sometimes there's also bogus reasons for objecting. It's guys trying to kind of shake you down for a few euros or whatever. So that whole system, you can be 12 months, you can be even more. Like, I think we bought a site nearby from where I'm living now, and I think we're 18 months trying to get permission on it. So 18 months, we bought the site, paid cash for it. 18 months later, we're still trying to get the permission. So you can imagine, actually, I think we got permission now and we're just about to start. But like 18 months before you're even on site, it's going to be another 18 months of construction. So that's 3 years. So the planning system could definitely be improved. And that would mean that the development land that's coming on can go through a rapid permission sort of cycle, and then straight into construction. And then, is there enough contractors on the market to actually allow it to be? Like, one of the biggest problems that you have when you're developing is that you're using subcontractors, and the subcontractors are in short supply. So there's lots of developers in different sites, and they're putting pressure on the subcontractor, like, be here to go and finish these houses. And they're being screamed at by another client who's in another development somewhere else and screaming at them to come here. So the guys are back and forth, you know, trying to get stuff done, but that can cause delays and things like that. And so projects can drift on longer than you might have hoped. 15,000 Irish people left to move to the UK this year alone. Christ, yeah. This is from Mr. Owen. A high number, Irish born and bred, but living in the UK for the last 13 years. Read recently, there's more UK people moving to Ireland. Yeah, apparently 20,000 people moved from the UK to Ireland in the last 12 months alone. What's your view on development land, future values? I think it'll just continue to go up, I imagine. And the reason I think that is just because the demand is so great for property that, you know, you've got, as we said there earlier, 98,000 more people in the country than there was just 12 months ago. Those 98,000 people need to have a property to live in. And so where are they going to get it? And so if we're only building 34,000 this year and we have 98,000 people to house, plus all of the people that were there before them, you know, you're talking about a never-ending supply demand tension. And so that's what we're looking at, you know. Anyway, let's keep it on going. Do you think they will remove rent pressure zones to try to keep private landlords in the market? That is a really good question, Fintan, and it's hard to say. Like, I personally think that this is such a hot potato for them. I think what they're probably going to try and do is to, kind of equalize the rent pressure zones. I think they want to keep the rent pressure zones in there. In order to stop rents kind of going off the map in terms of increases. But there is a whole load of people that are being very badly impacted by the rent pressure zones. And to give you an example, if there's two properties side by side, we'll say, and let's say I was renting a property for $2,000 a month, and my nice landlord, this actually happened to me, my nice landlord was just a decent soul who did not want to go through every year increasing my rent. And so I lived in that house for 7 years. And in those 7 years, I never paid 1 penny more at the end of each year. Like, she just never came near me. She just said, look, you're grand. As long as you keep paying the rent, you're a nice guy. There's no issue. So that's the way it was. I move out of the property, and the next person who buys that property or the next person who rents that property is not able to, like the rent cannot increase more than the rent pressure zone will allow, which is like 2% of an increase or whatever. So if somebody comes along and decides to buy that property, they are stuck at that €2,000 plus the small increase. That's the level that they're stuck at, even though all the properties in the area around them might be at 2,500 or 5,000, 3,000, whatever it might be. You can't increase it. And so you're stuck at that level because of the previous landlord. Now, if I was living in a house that I owned next door to that property, and I decide, you know what I'm going to do? I'm going to go and put this house on the market to rent, and I'll see because there's no previous history, I can set it at the market rent. So two identical properties sitting side by side. One is getting 3,000 a month, the other's getting 2,000 a month. There's nothing that the landlord can do to change that, other than a big renovation job, or they dramatically improve the BE or the energy performance of the. So I think they definitely need to do something about it. I think probably what they'll do is they'll have some sort of a reset where it can be to market level, but it can't be incrementally increased above a certain amount or something like that. I think there might be, maybe the way they'll do it is like, if a property is way out of kilter, that in those circumstances, you can bring it up to the market rent or something like that. Nesson. Hi, Gavin. I think the DAFT data is relevant, but does not the full picture. I don't think landlords or agents need to use DAFT to advertise rental property anymore. Yeah, I think you're right. So there's probably, when you say there's only 5.9 properties per 10,000, probably there's a whole lot of stuff that's in the not listed on DAFT that might be just, and I know people that are renting properties like short term through booking.com or things like that. Stats are like a bikini. They show a lot, but you're not getting the full picture. Nice one, Fintan. Let's go on anyway and see if we have any more questions in the Instagram group. I'm going to go to TikTok now, and I think there's a lot of properties. There's a lot of questions in TikTok. Property prices in Marbella are flying up as more people are coming here to live and work remotely. I would well believe it. I have the house, the villa in Spain, and it's going to be coming back to me. That the tenant, I've had a tenant living there for the last 3 years or so, and he's indicated to me that he wants to give it back in January. So I'm thinking to myself, I will probably turn that into an Airbnb, and I'll probably, put it in my name for certain weeks of the year when I want to come down and use it, or maybe a month in the summer or whatever. But the rest of the year, I'm just going to have it out there. And that is very attractive to people as well. That's an alternative rather than moving yourself. Do you think there's actually any will to fix the housing situation? So many people my age have given up and have emigrated. I think there is a will to fix it, but I think it's such a kind of complicated thing. It's very difficult to fix. Like if you look at the problem, how do you fix something that has so many parts? Like you've got to fix the planning system. You've got to get the housing, you got to get the construction capacity up, which means that there's more people coming in to actually increase the amount of use of the houses being rented. Sorry, guys. So I think they do want to fix it, and I think they have to fix it. But like as I was saying earlier, despite the fact that you have decided that you're kind of giving up and you're moving abroad, all the people in Spain, Portugal, Italy, and Greece, they can get a doubling of their salary if they move to Ireland. And so like obviously the nice weather in those countries is great, but a doubling of your salary effectively. And so you guys might be moving abroad, but there will be just as many people moving in at the same time while the salaries continue to be like this. And I can't see them changing. What pension fund is that? I don't know what that question relates to, but I know there are pension funds that buy and sell property and things like that. So we've had a lot of questions on Instagram. Now I'm moving over to the TikTok one, and there's always loads of questions on TikTok. And sometimes we get a couple of cheeky comments thrown in there as well. So let's see. We have got the first one. And how many properties do you own? What's your opinion on Joe Doyle? I know Joe very well. I have commercial properties. I look after a business park with a lot of commercial property, and so it's not quite the same. I used to own a lot more residential property, but I sold it all when the crash of 2008 took place. I had banks all over me, and so I sold a lot of my residential stuff and just got out. And my last property I sold probably around 2018, and that was my last rental property. My last residential rental property. Joe's a good guy. Joe, I know Joe quite well. He's been on my podcast, and like Joe does a lot of stuff, and he knows what he's doing in his area. Like he's very specialist in his particular area. I think like I've done more stuff. I've done international. Like I spent 7 or 8 years abroad, so I've bought in 4 different continents at this stage. I've owned property in New York. I've bought property in the UK, in the Middle East, in Spain, and I've actually built a project in Africa, of all places, down in Ghana. So I've done a lot of stuff internationally, and so different types of things. Wacko asks, how are things, Gavin? Things are good. Enjoy my weekly call with you guys. You can always trust a man with the red folders. So that's my red folders up there. I saw that earlier. Eddie Shaw, what's the best advice for finding an angel investor? Well, there's angel investor communities out there. So, go out and mix with the, one of the things that when I was into angel funding and stuff like that, what I did was there was Dog Patch Labs. They had like a weekly get together where I think it was actually not weekly. I think it was the last Friday of every month, or the first Friday of every month, they had like a get together, and they would usually get a speaker. And if you just mingle in those kind of groups, you're bound to meet your angel investors, and you get, spark up a conversation and start doing that. Obviously, if you have something that's worth investing in, then the likelihood is you can go to the likes of Enterprise Ireland. And if you're if you go and talk to Enterprise Ireland, they will vet your scheme or whatever it is, the project that you're working on or the business. They vet that and they get it basically investment ready. So meeting an angel investor on its own isn't necessarily any good unless you know what you're doing and you've actually got sufficient amount of knowledge to put a pitch deck together and structure the business in a way that angel investor is likely to be interested. And one of the best ways to do that is go through your local enterprise center or Enterprise Ireland or something like that. Those Enterprise Ireland have a thing called the HPSU, I think it's called, the High Potential Startup Fund, and they'll give you 50 grand to start a business. And but you have to make sure it jumps through certain hoops to get to that level before they'll give you the money. Spoken like a true global communist. Shave it, lad. I don't know. Is that what you mean? What's my opinion on Bitcoin? So Bitcoin is interesting. Like as I said earlier, I don't have any association with any crypto investment. So don't fall for the bullshit imposters that are kind of pretending to be me. I will never promote a crypto scheme, but Bitcoin is interesting. And I have found that I have been looking, like my first experience with Bitcoin was in April 2011. And I was at a barbecue. It was actually when I was living in my villa in Spain. And I was at a barbecue at a friend's house. And this guy was an American who was into the tech sector and all that. And he was saying, are you guys interested in crypto? And no clue, like nobody was talking about it back then. And I can remember he said, would you like to buy some Bitcoin? And we were all like getting educated by this guy, like, what's Bitcoin? So he explained, like, he had read up on it and he knew all about this. And there was another neighbor of mine who was he was the chairman of the Bitcoin Foundation or something like that. I can't remember the name of it, but he's a guy that would be really, really respected in the crypto industry. Anyway, these guys were all talking about it. And so we decided that we would group together as a bunch of pals and we would invest in Bitcoin. And I can remember the price, the weekend that we decided to invest, the price of Bitcoin was $92 per Bitcoin. Now it's 70,000 or whatever it is. So $92 at the time. And we said, yeah, let's do that. And we were kind of calculating, we'll each put in, I think there was 5 of us and we were each going to put in $4 grand. So there was going to be $20,000. We were going to put 4,000 each into it. And we were going to buy at $92 per Bitcoin, how many Bitcoins we would have bought. Do the maths. But then the Monday, when Monday came, we sort of said, okay, what's the story? What are the prices at? Are we going to go ahead and do this? And he said, guys, there's been a bit of an increase. It's now 142. And so it went from 92 to 142 or something like that in just the space of a few days. So a 50% increase. And we were like, come on, like, if we buy now, like, sure, we could be looking at a 50% loss of our money in a couple of days. So we decided to get out of it. And so just shows you how, like, now, do I regret it? No, like, the reality is if you had bought at 92, you would have considered yourself an absolute genius if you sold at 920. You'd have 10 extra money and still not even a fraction of what it's at today. And so you just have to kind of, like, obviously, if you're buying something, usually you're buying it with a view to selling it at some point. Whereas with Bitcoin, it seems that people are buying it and just they have this view that they will never, ever sell it. And maybe what you do in that situation is you just continue to hold it, and maybe you're able to use it as collateral so you can get debt on it or something like that. But I would imagine that if you try and go to like a mortgage provider or something like that and say, listen, I have all this Bitcoin sitting here, can you use this as collateral? They'd be very nervous about that because they're thinking that that could be half the value next month. And so how much collateral is it really worth, Let's have a look. I work in big tech in Dublin, 200K plus 85% of colleagues are international and high paid. Yeah, that's what I'm saying. So those guys in Spain or Portugal for the identical job be on about 100K. And so you come here and now Portugal, yes, costs are a lot less, but this is exactly the conversation, wacko. I had earlier on my mastermind with this chap that he's from Greece. He works for one of the tech companies, and he was basically seconded to work for them in Portugal for 2 years or something like that during the COVID crisis. And then now he's based in Dublin. But he said that in the period of time, he was in the exact same role, exact same job title, exact same company, exact same project. He's a project manager. And so his salary in Portugal was 50%, exactly 50% of what it is in Dublin. But he said your costs would be lower in Portugal, but they wouldn't be 50% lower. And so he said that it makes total sense to move to Dublin from that perspective, for exactly the same job and everything like that, you know. So that's something to bear in mind. Joe, if real estate in Ireland is an investment, why are so many landlords leaving the market? They are leaving the market because of the treatment of them, which is like a lot of people view landlords as some kind of bad person. Like, basically, you saw the comment earlier, somebody called me a global communist. Like, the vast majority of landlords are mom and pops that have bought it as an investment. Maybe they want to buy a property so that they'll have something to leave their kids, or if you're a plumber or an electrician and you've been working away and you want to build up a pension, but you don't know anything about pension funds and you don't trust the idea of giving all this money to a stockbroker or something like that, you would say, you know what, I much prefer to have the property in my control. I can rent it to who I want and all that. So that's what was driving a lot of the people that bought property. But because of the 2008 crash, there's kind of this vilification of landlords. And people seem to think that they're the cause of the crash of 2008. And so all landlords are scum and therefore they should be treated badly. That's the kind of the attitude that I see. And so a lot of people, first of all, that's one of the attitudes you get. But the second thing is that we're taxed now like crazy. So if you buy a property, and first of all, you have to register with the RTB, and the RTB is massively under-resourced. They've got all these people trying to rent and all these landlords trying to register property, but they don't have enough staff themselves, as far as I know. And what that means is that there's huge backlogs, and so you can't get anything done as a landlord. So people move into a property and stop paying rent for whatever reason, maybe completely wrong not to pay rent. And the landlord is there, he's got a mortgage to pay, and he's like, geez, what am I going to do? So they try to evict the person. The RTB at the moment are involved in that whole thing, and it can be up to 18 months to get a tenant evicted. So you can imagine how unattractive that is. And so the moment you get the property back, you have all these arrears that you owe the bank, like 18 months of mortgage payments that you haven't been able to pay, unless you have the money coming out of your salary or whatever. But you've got this big mortgage arrears, and the only way to clear it is to sell the property and take your equity. But also you've got such a bad experience of dealing with this crap that you're like, I'm not doing that again. I'm not going to risk that again. And so I think that's one of the reasons. But also taxation. Like if you have a job and you're paying 52%, as so many people have to pay in this country, 52% on your income, then every penny you earn on rent, you have to pay 52% on the surplus that's left. So you can go and deduct your interest on your mortgage, not the capital, just the interest. And so it leaves a small amount. So it's quite marginal. That's one of the reasons why people look at HMOs, because with a HMO, you're earning a lot more than your traditional. And so that's one of the reasons why I think people, if you're going to do any kind of rental, probably the more attractive is to go down the road of HMO, certainly from an income point of view. Let me see what I'm looking at here. Sorry, guys, I'm after pushing a button and I'm okay, back. A friend of mine did the same, Gavin, bought at 62 and sold at 620, 10x, couldn't blame him. Yeah, exactly. Bitcoin, just like nobody would expect any investment to go from being pennies to being 70,000 and for it to still be considered to have more to go, so crazy stuff. Anyway, So why are people? So hopefully that explains why a lot of people are leaving the market. The next one, they're in Dublin. There's Dublin. Their salary is going to Dublin. I get it. Ha ha. I'm funny. I don't know. Oh, they're doubling their salary by going to Dublin. Yeah. Listening to Dubs puts me off. Okay, well, good luck to you. Hi, Gavin. What's the most profitable type of commercial property to invest in? So nowadays, definitely you don't want to be getting into office. Okay, office is going through this really difficult period at the moment. Like, I'm a big office investor, and I have a portfolio that I'm managing and I'm looking after, and it's like it's really difficult at the moment. COVID has just thrown the whole thing on its head, because now so many people can work from home, they can use hybrid, they can use all of this kind of technology. So a lot of big office occupiers are handing back space. They don't need it as much as they used to and stuff. That is very negative, and so that's pushing down prices. So we've been experiencing that. Funnily enough, the one that was always kind of second fiddle to office was industrial. So warehouses, and we call it logistics, big warehouse where we say Amazon would store all the boxes in racks and stuff. That's hugely profitable now. It's gone up massively. You could buy that for a very small amount back in the day, and everyone was interested in offices. They weren't interested in industrial or logistics. Now it's the other way around. Since COVID, all of those warehouses and stuff continue to be operating. You still need it. All of the big companies like Amazon stuff, they never missed a beat during COVID, so they just kept on expanding. And so naturally, logistics was one of the areas that I used to make really, really good money. It's not really something that you can do anymore as easily, but in the early 2000s, the thing that I would do is I would buy a commercial retail unit that was vacant. And when you buy something that's vacant, you buy it at effectively build cost. So I can remember buying a unit for 630,000 in Clondalkin. Now, Clondalkin is a working class area. You wouldn't think like that you could necessarily turn around and make a huge amount of money in Clondalkin, but I bought this unit, and it was, I think I can remember the size of it was 4,700 square feet. It was a big unit, and 630,000 to buy it. And what I did was I went for planning permission to split the unit. So 4,700 square feet is huge. It's like a big, you'd put a carpet showroom in there. Like, it was so big and spacious, or you put a small gym in there or whatever. But you just would not be putting a shop in there because it would be too much space, unless it was like a small supermarket or something like that. But anyway, I went and I split the unit into three. So the 4,700, one large unit became three units of, I think it was maybe 1,500 square feet was one of them, 1,000 square feet was the other, and whatever the balance was, that was the last one. And put in 3 toilet connections, 3 water connections, 3 distribution boards for the electricity, and built the concrete walls between the 3 units, and then put doors in the front door, and then put them on the market and rented them out. And I remember I managed to get carry out the off license. I got them to rent one. I got, at the time, they don't operate anymore, but at the time there was a company called Godfather's Pizza. So I put them into one. And then there was a bookies called the Track Bookkeepers, and they went into one. And so that was went from being an empty unit that was way too big to being 3 smaller units that were now occupied with tenants. And the amount of rent that I was able to charge, because they were smaller units, was more than you would get for the large unit. And when I put this for sale on the market, I basically put it out as an investment. You could buy the individual units, or you could buy the entire. And basically, I got a whole lot of people saying, I'd like to buy the pizza place. I'd like to buy the off license. I'd like to buy the bookkeepers. So I had all these people putting in best bids, and at the end, so this total project period might have been 18 months. I think maybe 18 months, maybe 2 years maximum. But 18 months later, I sold those 3 units for 3.2 million, I think it was. And so there was actually millions made on that deal, and it was mind blowing because you just don't. I had no idea it was going to be so profitable. I knew it would be profitable, but I didn't know how profitable it could be, and so that blew my mind. And then I went and I did that several times again after that, and that was when my wealth really exploded, because once you've done it once and you've seen what's possible, you suddenly start looking everywhere and you start doing them all over the place. Now, I did make a few mistakes, and I bought one, and the tenant pulled out then just before I was able to sell it, and so the price fell in value and stuff like that. So it can be messy, and certainly today, the conditions that existed back then are different today, and it would be much, much more difficult. But I hope that explains some of the different commercial deals that you can do. Let me see. If real estate in Ireland is viable, where that question keeps on coming up for some reason. Okay, I'll keep going. You should be answering people's questions, lad. Yes, I'm doing that now. Let's see. Oh yeah, it keeps on asking the same question. Okay, corporate slave trading operation free for all, flood out national rights. Okay, yeah, I know there's always a lot of people that are not too happy about the migration situation. Thoughts on property economics course in college. So I have a friend who did it, and it was a good idea to do it. One of the reasons why you want to do property economics is the other alternative is to go down the road of doing an auctioneering course, which is probably not as long. And but if you go into property economics, you'll learn how property is valued properly. And when you come out of it, you can go in and you can become a chartered surveyor, and you can start working as a property agent, things like that. So I think it's a good course. I think I did architecture in Bolton Street at the time, DIT, and I was on the top floor for the architectural course. The floor below us was the property economics course, and I was there the same time that that Pat Gunn was there, and so the two of us were basically in the same building every day. The next thing, hold on, my son is sure. I'm busy. I know. Sorry, guys, my son is shouting at me because the TV remote is broken. Anyway, thoughts on Sing Wonderwall. Okay, there's people thinking that I'm connected to the Oasis. I can't get Oasis tickets, so this Gallagher will have to do half a world away. I can't help you, sorry. Actually, guys, on that topic, it is okay. I'll be there in a few minutes. It's in a couple of minutes. I'm going to be finishing up, so I'll answer a couple more questions. But let's have a look, see if there's any more questions that I can ask. Increased regulation, different tenants, etc. If I was going to buy to let in Ireland, do you buy with leverage now or wait to the next recession? I think anyone who's waiting to the next recession is really taking a big risk. That you could be waiting a long time for the next recession. The next recession could be tomorrow, but in terms of predicting, looking at the likelihood, I don't think there's a big recession coming for Ireland, because the dynamics of the market are just so out of kilter. We have something we're about 200,000 properties on where we need to be, and we're building 30,000 a year. So it's going to be years before we ever catch up, if we ever catch up. And so I think for that reason, property prices will continue. So when you're buying property, almost always buy it with leverage. And usually what you'll do is you'll get the maximum you can. If you're buying it for yourself, you'll put down 10% and you can borrow 90. If you're buying as an investor, you can put down 30% and you can borrow 70. Now, if you go to the UK, you can do much better than that. But then if you're trying to bring the surplus back, you have to go and take into account the exchange rate and all that. So it can actually cancel you out, and you can end up making a big profit. And when you bring it home, the exchange rate changed in the interim, and so you actually lose money. Yeah, that's per capita, not against 10,000 would-be renters. Yeah, it's per capita. Anyway, so those are some of the things that we talked about earlier. A bedsit is 100 grand plus here in Southeast England. Yeah, a bedsit. What's my favorite book to read? A lot of different books. I'd say the one that I quite enjoyed the Arnold Schwarzenegger book, Be Valuable, I think it's called. And I read that recently enough. I enjoyed that. I was a big fan of Arnie back in the day. When I was 13, I think the Terminator came out, so I can remember being impressed with the muscles. What else? There's a lot of different books that I've read. I like those kind of sort of mindset and personal development books and things like that. How would you ever start as a property investor? As an electrical apprentice, will I ever get there? Don't lose faith. So one of my clients is started at 14, left school at 14, went and worked with, I think he worked with his dad or his uncle as an apprentice, an electrician. And he had saved up enough to buy his first property by the time he was 18. And like he bought a real kind of rundown place, and he spent his weekends doing it up and stuff. But he now owns dozens of properties. Now he's about, I think he's just turned 40, but dozens of properties. And so it is absolutely possible. And you just have to, well, first of all, you have to start to invest in understanding how it works. It's not enough, and this goes for everything. It's not enough just to buy a property and hope it goes up in value and hope, that you get a decent rent for it. There's all sorts of calculations that you have to do. There's ways that you can enhance the value. There's all sorts of stuff that I've learned over the years that, it's kind of obvious when you know it, but if you don't know it, it's amazing how many people aren't aware of these little tricks that can add value and the potential there. Like I shared the story about making millions on a deal. Like if anyone, that wasn't a fluke. You could actually go out and you could do that several times, but there was a sort of a finite period of time when it was possible. It's not really possible anymore because the banks don't lend money the same way and things like that. But at the time, this was something that you could figure out. If you're looking at the market and you're watching it and you're looking at values, you can see all this and you can kind of go, do you know what? There's a little opportunity right here. And we call it arbitrage, where you're able to buy something that is being undervalued by the market. Has the government set precedents with regards to planning permission for constructing modular villages? I don't know, but I do think that's definitely a way to go about it. I do a bit of property work, and my electrician has 2 spare houses that he's been fixing up for years. Yeah, the problem that I see, and this is just like my own personal kind of insight, is that people will often think, you know what, I'll do it up myself. I won't spend any money getting somebody else to come in and help me with it. And I can respect that, but the reality is that what you save by doing that up yourself, you may actually give up a lot insofar as you're unable to rent the property while it's being done up by yourself. So you might save, 20 grand by doing it up yourself and not hiring people to do that work. But you might also have lost 30 grand of rent in the period that you did that, so you have to kind of be smart about it. Do I think Bitcoin is a good investment? I think it depends when you buy it. I think if you buy, like you missed the boat in Bitcoin, yeah, I would, like certainly when it's up at 70,000 and things like that, I think you've missed the boat, because the reality is that something could happen tomorrow and it could fall in value to 15,000. And so you could be looking at a massive hole. And that's the volatility. That's the bit about it that I don't like. What you might do instead, if you're going to get into Bitcoin, is to dollar cost average into it. So say to yourself, I want to put $100 a month into Bitcoin. And I'm just going to, every month, I'm going to put 100 in. Instead of buying it all in one lump, just spread the investment over. Either do it weekly or monthly and do it incrementally, and just keep on buying on a regular basis. And that way you'll even out the ups and downs. But if you go in tomorrow and say, right, I want to buy 10 grand's worth of Bitcoin, you could have 2 grand's worth of Bitcoin a week later or a month later. And that's one of the problems that you have. Anyway, guys, it's 9 o'clock. As always, I'm going to bring this to an end. I hope you found it useful, and I will see you same time next week. And sorry to be bringing it to an end, but family want me. So talk to you soon.